Bring on board Krishnan ASV of SBICap Securities to understand this. Krishnan, thank you for joining us today on ET Now. It's a very important day for the banking sector. We have those mergers, which I'll talk to you later about. But first, I want to talk about this 9% fall in Kotak Bank. Many are saying that it's because of certain points that were highlighted in the conference call that was held yesterday. I mean, what were your takeaways? What exactly is sort of causing this 9% fall in the stock?
Yeah, thanks for having me on the show. So, very clearly the takeaways for all banks in the system, whatever we have heard, the commentary that's been coming from most of these banks in the system has been fairly consistent. I think banks are focused on staying liquid, on conserving capital in these kind of conditions. Obviously, credit growth is not a priority. Asset quality, nobody really knows, especially for certain segments of customers. You might have to live with certain, I think, higher delinquencies for a short while. Kotak Bank's own narrative and commentary has been no different. But of course, it's a solid franchise, so that helps. It helps that they have one of the strongest CASA ratios in the country, and that's something that they have built organically. So I think those are relief factors. But the kind of precipitous fall that you're seeing in Kotak Mahindra Bank stock today, it's hard to explain that just based on what they said yesterday.
Okay. This moratorium that has been introduced, one assumes that a lot of retail customers especially are going to take advantage of this, this moratorium. They've also in fact said that there could be increase in defaults due to which recovery will be delayed. And interestingly, they've also mentioned that they were seeing problems in unsecured personal loans such as credit cards, consumer durables, customers who are fence sitters and have the ability to pay but they will not. This in turn is going to arise, is going to give rise to this asset liability mismatch of sorts, increasing the risk costs as well for the bank. But you know what? I mean, Kotak would not be the only one at that, right? Which bank, according to you, at this point, could see the most amount of ALM mismatch due to this moratorium?
Yeah, true. That would be true that Kotak would not be alone. Also, remember that Kotak has been flagging the risk with unsecured and personal loan portfolios for a while now, right? So, they were amongst the first ones to say that, look, there could be some weakness in these portfolios around the corner. But so far, the weaknesses had not cropped up, at least not in the stated numbers. This remained one of the biggest vantage points for the banking sector, one of the few sectors or one of the few segments that is not throwing up high GNPA. But this environment is going to be quite, I think, demanding, purely from a deferral, because the RBI's forbearance essentially means nobody needs to recognize this as an NPA. But having said that, there is weakness in collections, given that feet on street is not something that the banks and other lenders can deploy very easily in this environment. So your last mile collections do take a hit. Non-salaried collections do take a hit, and I would imagine that would be true for many other banks. And you wouldn't single out just a single lender. Having said that, ALM mismatches would be most acute. I think these vulnerable names are fairly well known. There are no surprises on that front. As I said, you need a strong deposit franchise. Kotak would be one with a strong deposit franchise.
Yeah, that it is, and they've highlighted that as well, that customer deposits have actually been a bit better. They've witnessed an increase in customer deposits, not significant, but better than expected. And we've seen reports of how much money has been withdrawn. I read a report that mentioned 53,000 crore rupees have been withdrawn by customers. So on that front, I suppose Kotak would still be a bit better. But of course, when it comes to NPA, you mentioned, Krishnan, about how nobody knows how this whole asset quality bit is going to pan out. But just when we were expecting some recovery, COVID hit banks, and I don't think recovery as well is going to be extremely great. At this juncture, which bank again would see problems? I mean, there's no bank, there's no NPA forbearance of sorts that's, I think, if I'm not mistaken, been announced yet by the RBI, obviously. So at this point of time, do you think that will be that one big threat that banks could face?
So the way I look at it, it's not about secured, unsecured. I think it's about what customer segments have you lent to put money to, right? So if you are largely centered around salaried customers, if your portfolio is largely built up on salaried customers, there would be income shocks, but those income shocks might be cushioned a little better, because if you have more PSUs and private sector employers within your portfolio, chances are the PSU employers may not face an income shock right away, right? Whereas the private sector employees probably do face an income shock, but a relatively low income shock. Over and above that, if you have self-employed in your category, I think the income shocks will be far greater there. The elasticity to income shocks is far higher. More people from within that customer segment may have to avail the moratorium, even though interest accrues. So I think it's more a function of what kind of mix do you have. MFI, that's a customer segment that will be impacted because these are daily wage earners, etc. So given where we are in the pandemic, given where we are with the kind of lockdown we have in effect, the economic shock and the income shocks will be far higher for such customer segments. And any bank which has a significantly large portfolio or large exposure as a proportion of their loan mix to that, and the likes of IndusInd Bank, RBL Bank, these do come to mind. I think a lot of banks do have decent exposure to MFI unsecured. It's about how you can mitigate the risk in this environment. I think the more solid your frameworks are, the better off you are.
Yeah. Point taken. Great. So this fall as well that we're seeing in Kotak, it's not necessary something that was triggered because of some con call commentary. That's what Krishnan ASV believes. Thanks so much, Krishnan. I hope you and your family are staying safe amid this COVID outbreak and the lockdown.